Eric Muathe, Muathe.com, with a quick video here. And again, this is for those who have the propensity or sometimes the inclination to hold on to stocks for a period of many years. Now I want to show you we can still use the same principles we discussed in the last video, I believe, where we can come back and wait for pullbacks and just find an area in the chart where we can take a position after a pullback. Now go back to the RSI 50 bounce here. That was a good entry. You got a couple of attempts to drop below 50, but ultimately we hold the RSI 50 with multiple uniform actions below it and back above it for this zone, which was a re-entry. And then again we come back here, we see we kissed the RSI 50 level for the lows of 2016. So clearly using the RSI 50 is something we know, but sometimes we tend to forget. If you're looking for pullbacks, that's where you can start hunting for logical entry levels. Now that's one way you can look at this chart. There's another way you can look at it with the same conclusion, and it is that we break out here above the RSI 50 level, which is this entry there. Since then we can see that the stock's been using that same level here for uniform activity support. In other words, the uniformity method comes in play, because every time we bounce on this line with uniform action, you can see that the stock does respond to the upside. Uniform activity bounce on that line, and also these are multiple layers of uniform activity support on the blue line, which happens to be again the RSI 50 level, and also here we can see uniform activity bounce on that RSI 50 level and the blue line. So if you like to wait for pullbacks before you can take a position in a stock, hoping for a major move higher, well, that's one way you can time these types of pullbacks, by waiting for the stocks on the monthly chart to bounce back and hold the RSI 50 level. Eric Muathe, Muathe.com. As always, good luck, peace and blessings. ERCS. Woo!